Well, welcome back from break. Appreciate everybody getting some caffeine in them. And really the opportunity here for this panel is to take a little bit of break from the demos and kind of looking at the amazing products that we have on Symphony and really talk a little bit about market structure. Everybody in this room is solving problems. And sometimes when we look at what's happening in the marketplace, that's where what we're trying to solve for. So today we've brought together a stellar group of industry experts to really talk about the trends of the market structure that's out there. So to my right, I have Sarah Schaffer. She's Global Head of Platform and Equity in the Ecosystem Strategy at BlackRock Global Markets. Sarah has worked across multiple departments within BlackRock as Head of Aladdin Product Management and Chief of Staff to the Chairman and CEO of BlackRock. And then to her right, we have Kate Finlayson. She's Global Head of FICC Market Structure and Liquidity Strategy at JP Morgan. Kate has over 25 years experience, having worked at UBS and Goldman in prime brokerage, clearing, and execution sales across multiple products, including FX, rates, and credit. And then at the end there, we have Mackenzie Smith. Robert's the Vice President of FICC E-Trading Market Structure at Bank of America. Robert's focus is on market structure content development, leveraging his background in journalism at FX Week and risks.net, and a research analyst at Bloomberg. So we have a great panel in front of us, and I really want to open up the floor to talk a little bit about the trends that we're seeing in the marketplace. So Sarah, your focus when you're thinking about the focus at BlackRock in 2024, how are you guys thinking about market structure?
Sure. So we really see four key kind of big trends impacting market structure and the capital markets, and in particular the trading ecosystem, which I think is relevant for this group here. The first is what we've been calling a redistribution of risk-taking, where we've seen, in addition to the traditional banks lending and providing liquidity to the ecosystem, we also have a number of newer entrants, alternative liquidity providers who are really coming in, which is creating a shifting liquidity landscape. This means we have new types of counterparties, and we're all kind of still figuring out how we work together. The second kind of key theme that we spend a lot of time thinking about, very pertinent for today's conference, is a acceleration and advancements of technology and market structure. Technology is rapidly changing our markets, in particular the bond market, where we have seen, due to the adoption of ETFs, which has brought sort of equity market structure to fixed income, ETF market makers are bringing sophisticated pricing technology, trading infrastructure, and it's changing how bonds are traded. And so this is really an opportunity for us to kind of level up and think differently about this particular segment of the market. The third is just an extensive regulatory agenda. We are facing a lot of regulatory change globally. As an example, here in the US, we have big kind of market structure rewrites, whether it is things like what is the definition of a dealer? How do we think about equity market structure? What is a trading platform or an ATS? All of these things are sort of in play right now. This is an opportunity for all of us to sort of partner, work together, and continue to make sure for investors we are accelerating or sort of enhancing transparency. We're enhancing resiliency in the market, sort of for all market environments. And we're continuing to provide sort of more tools that help kind of the investor get access to markets. And I would say the last theme, which is kind of broad bucket, is new markets. And this could be interpreted in a couple different ways. The first is regions like India. So we have new markets, new capital markets that are rapidly developing that sort of foreign investors are looking to access. We have new market segments or segments of markets like the individual or self-directed investor playing a bigger role in markets and capital markets today than ever before. And then new asset classes or sort of new areas of markets like, as an example, digital assets. So how do we think about that? And there's a lot of white space here where the rules are still being written, and I think that's a really big opportunity for all of us to sort of play a role together.
No, that's amazing. There's a lot to unpack there, right? And obviously there's a lot going on in our marketplace. So Kate, how do you and JP Morgan think about this sort of global market structure landscape related to the bond modernization in ETFs?
Yeah.
And maybe touch on the rewrite as well.
Absolutely. So Sarah highlighted some really pertinent developments, right? And I think if we look at the bond market and credit markets in particular, that's often been seen as the last frontier when it comes to electronic trading. But there's been a huge demand, an increased demand for the electronic provision of liquidity and trading. We've had systematic firms enter the credit markets as well, so that has shifted and brought about a lot of innovation and change. So whether that's increase in direct streams, click to trade, click to engage, the increased trade and adoption and use of bond ETFs, for example, and we see the correlation between ETFs and the underlying, as well as actually the create-redeem process, ETF create-redeem process, and how this interlinks with portfolio trading and algorithmic trading, and how this together helps to foster further liquidity. So really all of these things are driving a lot of innovation and advancements, which is exciting. A lot of room to run in that one. And I would say, just looking and thinking about the regulatory rewrite that you mentioned, we certainly have had a lot of regulatory proposals of late. It's kept us very busy. But also I think that probably, in my opinion, there's more to come. So when we think about that, it's obviously something highly engaged in, because some of these proposals could be potentially particularly formative in terms of the provision of liquidity in the market, how you access that and interact with that, and the technology that you use for trading. So I think that where we have seen buy side and sell side come together, and that collective view is very, very important and fundamental as this major change starts to rumble through. I would also say, just thinking about this regulatory rewrite and these rules, and when you think about how firms have to actually prioritize the readiness for some of these proposals, and think about where they actually start and what they have to, from a resource perspective, tackle through that, and also how this influences and impacts the tech investment spend crucially as well. So I think it's quite critical that there is still that wiggle room or ability to innovate, because there are a lot more efficiencies that can be gleaned in the market for sure.
Yeah, really, really important points. And I know collectively just communicating what's going on within market structure is important, so that the firms themselves can react and can prepare, right? So I think, Robert, as you and Bank of America are dealing with global trends, and I know, kind of looking at it from your role and writing about market structure, how are you looking at transparency, and kind of how are you looking at kind of those points as well?
Yeah, it's funny actually. I've been at Bank of America just 2 years now, and in that time there's just been an enormous amount of regulatory change just in that short period. And in regards to transparency, we look at it in kind of two ways. One is that it's global. This is not just a trend centered on one location. We see it in Europe and here in the US as well. And also, second point is data and the proliferation of data. So just to kind of talk through briefly what exactly is happening. So, for example, in Europe, in both the EU and the UK, we're seeing major changes around the current transparency framework, which has been put in place for a number of years. There's been deficiencies with that in that many, particularly in the bond market, where there's just a lot of bonds that aren't made publicly available in a real-time manner, not in the same way that you have here in the US with Trace. And so there's been a lot of effort from both ESMA and the FCA to look at reforming that process and look at changing how quickly bonds are disseminated to the public. So just to give an example, there's only about 10 to 13% of corporate bonds on a daily basis that are printed in real time and that investors can see. With the current changes as proposed, that could increase to anywhere to 70 to 80%. So it's just an enormous change that we see potentially happening in the marketplace just around the corner, really. This is likely to come in place next year. And it's significant. And in the US, we've seen similar changes. Obviously, in the securities markets here, typically much further ahead in Europe from a transparency perspective. But in the US Treasuries market, it's been a little bit further behind. But just recently, now there are individual trades disseminated to the public on an end-of-day basis, and I think it's only going to carry on and get more transparent from here. It's going to extend to the off-the-run market at some point as well, and the speed at which bonds are disseminated as well is only going to increase. Regulators really seem to be singing from the same hymn sheet as far as that is concerned. And in terms of the opportunities that we see as a result of that, as I mentioned, data proliferation is massively important. We've already talked about some of the new firms that are entering the bond market and what they've been able to do with the amount of data that's available today. That's only going to improve and become more significant. So as I mentioned in Europe, given the lack of transparency there versus say the US, you're only going to see changes in the uses of that data, be it algorithmic trading and smaller trade sizes, and also the way clients are able to benchmark their own performance and trading performance, as well as from a dealer perspective, conducting liquidity analysis and those types of things. So there's an awful lot happening, and I think as Kate said, it's only going to continue further. It's not going to stop here.
Mm-hmm.
Yeah, I mean, I agree with that. You even look across other asset classes, like, you look at options here in the US, and you talk about market data. When you have options going from a monthly expiration to a weekly to a daily expiration, the exponential growth of market data because of the opportunity to trade more products from electronification is super important. And then, so Sarah, you touched upon a little bit about the new frontier markets. Mm-hmm. Maybe you could touch on that a little bit more. Everybody, well, this isn't a crypto conference. I came from the crypto world at some point. But just, you also mentioned India. Maybe a little bit more about how you're thinking about the new frontier markets too.
Great. Well, we're a global firm, so we have kind of global market structure principles, and they really apply to each market sort of we're operating in, and I kind of mentioned it, and definitely to echo what Rob said, like we kind of think of it across 3 different dimensions as we look at new markets. And the first is about access, making sure it's sort of fair. The second is around transparency. A lot of that has to do with data. And the third is around resiliency, whether it's through diversity of counterparties, it's around liquidity, and again, making sure in all market environments we can have that stability. So that's really the lens we look at new markets. And then through that, I think you get the right guardrails and investor protections. So it's really all about making sure that we're collectively protecting investors in the end of the day, and that's sort of top of mind as we think about sort of developing some of these new areas together.
No, it's exciting. I mean, really the opportunity for new products, the opportunity to get into globalization within our markets, and having the framework and transparency to support that is important too. Kate, how are you guys thinking about the new frontier?
Yeah, I mean, new frontiers covers so much. Right?
Yeah.
So obviously a lot of that would gravitate around emerging markets, mm-hmm. And then proper frontier markets. Beyond that, so we've seen investors search for yield, where some of these markets are starting to open up for foreign investment. Very exciting, but also quite involved in terms of how you actually get access and what it means and the different products and access routes. So that is very exciting, and India will see certainly more developments this year, particularly bond index inclusion and so forth.
That's right.
So I think beyond that, thinking of new frontiers, pioneering ways of execution and delivering efficiencies. Right, how do you scale? How do you take something that you've worked on, that you've been able to deliver in electronic format, and then where there is demand, because that is what a lot of times drives innovation, is demand for some of these enhancements. So I think distributed ledger technology is very exciting. Mm-hmm. There has been this view, well, it's further out. There's not quite there yet, but there's actually a lot that is happening. And even if you focus more on the crypto side, the actual technology that underpins a lot of the innovation with respect to atomic settlement and all of this functionality that can deliver a lot of efficiency is hugely exciting. Mm-hmm. And we haven't even discussed AI. Yeah. So.
Yeah, that's right. Yeah, I left AI out on purpose because we talk about it every time. But listen, I think we could stay up here all day and talk about market structure. But I really appreciate everybody's time. There's a lot going on here, so if any additional questions, we'll be out having a coffee as well. So I really appreciate everybody participating, and just give me a second to thank the panel.
Thank you.